Welcome back, Alpha Hunters. Okay, so we just closed another week in the market, and what a day it was. You know, most of the week it was pretty quiet, pretty chill. Wednesday, Thursday, there was a little bit of movement, but man, today, whew, what a day. So we'll get into looking at a little bit of that and some of the big points to take away for the week, and then other notes and things that I noticed that were going on this week. Okay, and today, really. So we'll look here at the SPY and the Qs real quick, and then I'll shift over and talk about some of the major points for the week. But the SPY had a pretty bearish end today, especially for the week. And what you notice is we actually have two upper wicks in a row in a weekly, and then the body actually engulfs the previous week. So that's on a weekly, and that is typically not a bearish bullish sign. So we can expect to probably see some more downside, and the same things on the Qs, but right. So we got the Qs here, but it's a little bit more pronounced. And I do have a put position that expired in the money for today, but it's a little bit more pronounced. Obviously, we got a lot more selling that came in on the Qs between what was it, Thursday, Friday? Yeah, Thursday, Friday. We could probably just expect to see more downside, especially after yesterday's candle. Yes, Thursday's candle, after Thursday's candle. So Thursday's candle was extremely bearish, and I don't normally care to show off the futures, but I'm going to go show off some futures on the ES. So this is the futures for the S&P 500. So the SPY and the ES looks very similar, but I'm going to pull up a 15-minute chart. I'm just going to kind of zoom out here, and this is Thursday's action on the futures. Okay, this drop right here was the inflation numbers that came out about an hour before the market opens, and they just dropped just straight down for about 45 minutes, right? You got a 15-minute here, you got a 15-minute here, you got a 15-minute here, and then it just hung out for 15 minutes before the market opened, and then the market opened and rallied higher all the way, and pretty much it turned positive compared to the previous day. That's why you get this huge upper wick, because this was all that buying, and then when we kind of came back down, this is where you'd want to get bullish, right? And then we rolled over. This is the bearish candle that came in, and we just traded down from there. So what this kind of leads me to think is inflation is a lot more of a problem than what other people have been leading to believe, especially like the Fed and stuff like that. Other people have been calling for a lot higher inflation, or for the Fed to be more aggressive on fighting inflation. And I think we are starting to see a little bit too high of inflation numbers, because a lot of economists, a lot of people had predicted a pretty bad inflation number, but the inflation number that came out Thursday morning before the bell was way worse. So that is why we got this massive upper wick Thursday. A lot of people tried to come in the market Thursday morning as soon as the market opened, buy it up, pushed it all the way pretty much even, and then we just sold down from there for the rest of the day, pretty much. That is kind of what happened, and then I think today was just a continuation. We just kind of went sideways to start the day, and then we just rolled over, right? So here, this was Thursday's buying, and then we just rolled over, and then we opened flat right around in here, and just kind of went sideways, and then just rolled over. Okay, so with that being said, what can we expect? I do kind of expect now that we come back down to the 400. We'll probably get into the 420 area and chop around a little bit, and then maybe keep pushing down lower. We might come down and break this low that we set in on 24th of January before we get a bounce on the SPY. The Qs will probably have no problem breaking their low, right? So if we go to the Qs, they'll probably come down and smash this low pretty quick. But the SPY, on the other hand, I don't know. They might not get there the same time, but they might break it, bounce, and then roll over. So I'll maybe even watch out for that. But I do have short positions on the SPY for about 2 months out, looking for this pullback down to the 400 level. So we are starting to see some real bearishness out there. because that was not really what you wanted to see, especially after the end of last week and the beginning of this week, as we kind of came in and made this little U-bottom right here. You wanted to see the market continue to push higher, and it really was up until Thursday morning, that inflation number. Okay, so that was kind of a sum up of what happened this week on the general market and on the SPY, the SP 500, the Qs, the NASDAQ 100. Okay, but the big earnings news of the week was Disney. They beat earnings, they gapped up, and then obviously with Thursday and Friday's issue with inflation, they kind of just sold off, and they're still up for the week, but they did pretty good on earnings. They're not having nearly as much problem with Netflix on the streaming front, but like I said before, the inflation number from Thursday, it was really just the story of the week, as it kind of dominated over Disney's earnings. If we didn't get that bad of an inflation number, Disney's earnings probably would have helped lift the market, and we kind of just would have, the market would have just been trending higher, but the inflation number was just that bad. And so that kind of prompted me, as trading continued on Friday, as I'm just like looking around, I'm like, I wonder what's really getting hammered today. Tesla got hammered really good. I actually picked up a short position on Tesla this morning, and it's pretty much already in the money. Same thing with Apple. It's close to being in the money, and everything just kind of worked to the short side today. It didn't really matter what you had shorts on, so it's not really a big deal. But Tesla, I'm gonna go back to Tesla, okay? I know there was a lot of other people out there, like YouTubers and stuff like that, preaching Tesla, like Tesla forever. We might as well just get that tattooed across your forehead. I'm not about that, okay? Because I just look at this long term, especially this time period, just massive price appreciation. They always come back, man. You can go look at any stock that have had massive price appreciations like this, and you'll see the massive downside that comes later. It might not be a week later, it might not be 2 weeks later. I mean, but it's gonna happen. That's just the way it is. You just can't have that kind of price appreciation. And when I talk about Tesla like that, I'm in no way bearish on the company. I do like the company, okay? I like what they've done. They really changed over a lot of the automotive space, changed the way they do business, and I'm very appreciative of Elon Musk. I'm a big fan of his, a lot of his ideas. I'm mostly just talking about TSLA. I'm just talking about the stock, okay? This thing can go down well below 300. I would say if it gets below 300, you might look to buy. If I could see it below 200 sometime in the next 2 years. So I will probably continuously be looking to play this short. I mean, there's a reason why Elon Musk was cashing out a lot while it was up over 1,000 points. Okay, there's a reason why. Because he knew that is ludicrous, and you're gonna lock in when you can, so he was. Okay, but as I continue to kind of look around the market today, I come across a few stocks. NVDA, which was down roughly 7% today, which is massive, and AMD. AMD was massively killed today, down 10%, okay? Semiconductors, and you guys heard me say it before, semiconductors typically lead in bullishness and bearishness. What we saw today on semiconductors was hugely bearish, okay? So this is not a good sign for the market and potentially even the economy, okay? Because as they need to be aggressive on interest rates, and they will continue to probably look to raise interest rates higher and faster now, that will lead to a lot of things happening on the economic side, which, rising mortgage rates, which means less people can get home loans, which means there's less money going in the economy, because housing is very much a big part of driving economic growth. This is an area where I would definitely be paying attention. And when I was just kind of looking at AMD earlier, I was like, man, I mean, I can see AMD all the way back down under $50. Now, I don't have a line here, but if I keep zooming out, 50 points back here, anything under 50 points, these two peaks were under 50 points. So that would be where I would be looking to potentially get in long on some AMD. Anywhere between 50 to this peak right here, which is around 34, $50 to $34, that's where I'll just be buying a lot of AMD up. That would be my plan for AMD. NVIDIA, on the other hand, I don't really know, man, because this thing has just been on such a rise. I really don't know. I mean, I could definitely see it coming back down to this point right here, this 74.5 point area. So anything under 100, I'd probably be looking to buy it. But I think anywhere around that 75 point area would be good, a good spot to be buying. Now, one thing I do like to do as I do look around the market and just trying to figure out like what's moving and what's not is I'm going to open up the broker real quick. Is I like to show off, or I like to come look at the heat map, because when you have big market down days, it's really kind of hard to find the stocks that are not hugely down, right? Because we always watch the Apple, Microsoft, NVIDIA's, the Amazon, Teslas, PayPal, Visa, MasterCard. We watch a lot of those because they're the big companies, Google, Facebook, because they drive a lot of the news headlines and stuff like that. They're the popular ones. They're the ones you use a lot. So where I like to look and how I like to read this is when you get big market down days, I want to see what is not going down with the market. And when I look at this, I look for the green areas. Energy was absolutely killing it today. So was defensive stocks. And by defensive, I'm not talking like consumer defensive. I'm talking like defensive industries. So you got Northrop Grumman, Lockheed Martin, and L3 Harris Technologies also did pretty well. The other area is food stuff. So Philip Morris, Kraft, what is this? General Mills, Hershey's, Kellogg, Smucker's, Conagra, Hormel. The thing is if you're going to go into a bad economic time, people are still going to eat food, man. you can't really go without eating food. So these are areas where food is probably going to be a safe way to kind of hang out from the slaughter that is going on in tech right now. So energy has just been beaten up so much, and it's just been like not even the stepmother that's been relegated out to the mother-in-law house. No, they've been relegated to the ditch much for the past 10 years. And so you have seen energy really perform quite well over the past, ever since the new year started. Let me show you what I'm talking about here. So the new year, right? So we started the new year right here, and the energy industry sector is the XLE. Now that's what this is the XLE is up roughly 27%, right? And that's with the SPY, which opened the year all the way up here, right here. The SPY is down roughly a little bit over 7%. Okay, so energies are really quite well outperforming the normal market, right? The S&P 500, and that's very much okay. That's going to be expected as the Qs sell off, right? This is heavily weighted on the tech side. That's going to weigh on the S&P 500, which is the SPY, and so you just try to find things that are not getting hammered and driving the market down. So tech is really just weighing down the market. So look for energies, consumer staples, the food stuff. I call them the food stocks, man. Food stocks, Pepsi, Coke, all that kind of stuff. Like they're gonna continue to sell things no matter what. You can also go defensive industries. I would not go industrials, right? Because general industrials are very much tied to economic, kind of just how the economy's doing, right? So if nobody's buying houses, well, there's no one buying the stuff to furnish a house and that kind of stuff. So industrials probably get hit a little bit. So defensive industrials, these are very much tied to like government contracts and a lot of that kind of stuff. Another place I do think is not a bad spot to hang out is railroads, which is UNP, CSX, NSC. Really good spot to hang out, just because even if they do wind up pulling back with the economy and the market or whatever, in 2 years, I would expect them to be back up to their all-time high or so. Like I wouldn't be too worried on having a long sustained negative look on them. They also do pay really good dividends, and you can combo that with some option positions. That is probably the 4 areas I would look for. Energy's been doing really well. It's consumer staples, and then in the industrial area is defensive industrials and railroad. just because I know once it's kind of all done and we get back to economic improvement, railroads will be doing really well. You could also go to utilities. I'm not really a fan of utilities, but they are a good safe haven. And then there's pretty good spots where you can go into in financials as they continue to raise interest rates. Financials will do well because they do well in a higher interest rate type environment. So that is some ideas for you and just some different things I was looking at. But as far as tech goes, man, tech has been hammered. And the big one was definitely semiconductors. Today, they got obliterated. It was across the board. You know, this is Intel. Intel was down 2.5%. So we could definitely see more downside, and I would expect semiconductors to probably lead down as it just is not looking good for much of the semiconductors. But to wrap up real quick, this is what I am expecting. I do expect to pull back to 400. When we get to 400, I'll reanalyze what I'm expecting, okay? I'm not sure. I don't think we're going to bounce here and just go back to all-time highs. And I've shown that before. I just think that we have just deviated too high to the upside, and inflation just keeps being real bad, just too high. So we'll see what it looks like when we get down to about 400. We'll reassess. But enjoy the Super Bowl if you're in America. If you're not, enjoy the Super Bowl anyways. Alrighty, take care, Alpha Hunters.